This is the daily market analysis for October 16th, Wednesday, tomorrow, 2024. Let's get into the charts of Nifty 50 first. Everything remains the same. It's absolute consolidation with the bearish bias, and slowly the expansion is just begun, which is a cause of concern. This is the Bollinger Bands that we're talking about. Whenever the Bollinger Bands expands, either upside or downside, the price is likely to move that side. And clearly the candlestick is a bull trap. So it closed above the previous candle high and then closed below the previous candle's high. Clearly it has met with resistance at 25,252 is where the moving average is there, exponential moving average, and 25,450 has got the ordinary moving average. So it's going to be a struggle until the 25,500 is cleared, at least with the green close above ideally. And after that you have 25,850, which is got the gap resistance, and then it should be easy from there until the next gap comes in at 26,000 nearby zones, 151. So that is a flat close. An attempt to move up got stopped, met with resistance, and then finally closed flattish. Downside now the support can be previous swing lows at 24,650, 24,700 swing low, and the next swing low comes at 23,900 zones. Before that you have 24,000 rounding numbers, and there is the Fibonacci 38 that comes at 25,500 nearby. So that's the supports. If it slips first 25,700, then 24,700 and 24,500, and then 24,000, and then 23,900. That's going to be downside supports. Upside we've already seen. So that's it. Heavy resistance is seen. It has to clear this until then it continues to be consolidation, or the bearish bias can strengthen. Banknifty, yeah, exactly met with the exponential moving average at 52,514 and then stopped there. Yesterday we had a beautiful bullish move, but didn't sustain today. And as you can see, it's consolidation, absolute consolidation, giving no close on either side, no expansion at all, but bearish bias because it's below the median of the Bollinger Bands. So it has to cross above this 53,300 before we can say that it's back to record, but it's a cup and handle is formed, and if this breaks out, it can be a very good big move on the upside, but it may take its own sweet time consolidation before it breaks out of that. It may spend a lot of time here. The resistance first is going to be 52,500 to the exponential moving average. 52,000, so that's the 20 expression moving average, that's where it is, and then 52,500, and then gap at 52,817, and then 52,358. That is where the neckline of the rounding pattern or the cup pattern is there, and any breakouts from here would be back to bullishness next leg. Downside, the previous swing low is at 52,370, and if that is breached, it will find support at 50,000 rounding number, and then the previous swing low comes in after that 49,659, right? 20 extension moving average is at 49,200 if that also gets breached. That's a downside supports and outside supports. So here it is a hammer. The hammer in the middle of a rally, upside or downside, could be in a reversal, but this way we cannot confidently say on the short-term time whether it is a downside journey or an upside journey, somewhere in the middle, so may not be relevant anyway. What matters is a close above the median of the Bollinger Bands, right? What matters is to take out this gap at 52,820. Until then it's consolidating, that's what is happening. So today also an absolute flattish close, but with green it performed better than the Nifty, which closed flat but negative 80 points, 70 points. Nifty gained 90 points, positive but flattish 0.17% only. But green, that's the difference. Now momentum, if you see, momentum has dipped. Whatever was gained yesterday, it didn't sustain, but Banknifty it gained momentum further, right? Our momentum is in the sideways itself, and the trend indicator is bearish itself. It has not crossed over the bull zones, but the bearishness is decreasing, you can say. That's about the momentum. In the wicks actually closed flattish today and yesterday, so it is hovering around that 13, which is positive for the bulls because wicks is not spiking in, so there's not much things to big tension about. It's just time correction that's happening. What next is, we talked about volatility is India VIX, support resistance levels, we talked charts. Now what did market do today? This is the picture about that. Okay. What more was Airtel on 7 stock and ICICI Bank. ICICI Bank was a bit more. ICICI Bank rolling more in the bank sticks. So if you look at the major heavyweight stocks, you can see that its lines is falling down like anything is not that good. Right? Big fall, 2% fall today. ICICI Bank bounced back with its solid green candle. This is all flattishness, and Kodak Bank also slight dip. But the major highlight is on Reliance Bank, which is cracking down. It's at a major neckline support at 2,630. 2,600 zone. If that is breached, then we may have trouble because it's a long-term trend line there. So Reliance is breaking down, is what is pulling down the market. Others all close flat, and ICICI gained a bit. That's about the heavyweight stocks. Now, as far as the indices, sectoral indices, nothing much happened except that metal shed 1.5%, and auto also lost nearly 1%. Reality is only sector that gained. Otherwise, others are all flattish. Right. So some CG was the sector that was in the bear zone, so it is trying to come back. So flattishness, metal is losing more, but still okay, not falling to the bear zone. So nothing much to say in this across the sector. So just try to actually recover and climb back. So heavyweight stocks, Reliance is in trouble, and others are. ICICI Bank had made comeback move. Otherwise, the same. And the broader markets, the mid cap and the small cap is showing green still. It's at the very top. And trying to make small cap and trying to make new all-time highs once again back. So broader markets are strong. Not much has happened except for the FMCG slightly hit back last week. Things look okay. Fyers, they were sellers for hour. Yesterday also they are selling big. Today's data has not come in. But this is the culprit. Look at this. It's 60,000 crores of selling in about 2 weeks. And that's what is troubling. Today's data has not come in. Yesterday also they are selling big time. And it is the usual fund money that is flowing like anything that's keeping the market from backing down. Right? So Fyers selling. Use market, on the contrary, is at all-time highs. Absolutely no fatigue at all. It's momentum is bullish, momentum pricing. So oil has dipped and gold is at the top, ready to make the next breakout. It's consolidating before it can break out once again. Oil is dipping, so not bad global cues, despite the fact that there is the Iran retaliation or the Israel retaliation to Iran news. Apart from, in spite of that, oil is not creating much of a trouble yet, and the mother market US also is stable and not at the very top. They are all-time highs. Next event is the November mid-US election outcome that's going to change a lot of things and make markets volatile. So otherwise, global news looks okay, except the fear of the war. But moving to tomorrow, open interest. Today we had the open interest that is bearish on Nifty and bullish on Banknifty, with a long build up on Banknifty, and so that's contrary on the open interest of the futures. But for the open interest for tomorrow's expiry is what is interesting. PCF for the Nifty is 0.56. Tomorrow's expiry for the Banknifty, that is very close to the 1 but not bullish enough. Levels it's saying is it 52,000 and 51,000. 51,000 is where the highest put writing, 52 highest call writing. Narrow range that can extend if there is market is moving up towards the 53,000. So 2,000 points range is what Banknifty can be expected tomorrow in case it moves up. In case it falls down also, probably 51,000 may hold good. That's about interest. And to sum it up, market is already said that it's sideways consolidation that's happening with a bearish bias. There is every possibility that price action, the head and shoulder patterns and all that can turn negative, and the retest of this previous swing lows to 24,700 at least can happen. And from there, it's up to the market to decide whether to want to break down or consolidate there. But as of now, absolute consolidation is what is happening with the bearish bias. And you have to have tight stop loss if you're longish. Right, market is sideways, that's it. Right. Be cautious. That's all I have. Thanks for watching. Happy trading, happy living.